Hi, and welcome to the 8th edition of our Investment Insight series, Magellan Minutes. My name is Felicity Haynes, Head of Retail with Magellan Distribution Team, and today I'm joined by Lucina Martin, who's with our investment team and covers consumer staples. Hi, Lucina.
Thanks, Luke.
Lucina, you've just returned from a conference in the US, and it's a flagship conference for the consumer staples sector. Before we get into some of the key learnings, can you just talk a little bit about the overview of your week there?
Yeah, so it was a really fantastic experience. We learned a lot about the consumer staples sector, and there's important insights and implications for how the Global Fund is positioned in the sector, some of the companies that we're selecting out of that sector, and then how we think about quality generally as well. So quick overview of the conference. It was held in Florida in the US, and that's where 30 of the largest consumer staples brands come together from all over the world. Some names in the portfolio present were L'Oreal and Colgate-Palmolive, and also Coca-Cola as well as an example. And so each of those companies, they bring their CEOs, their CFOs, a head of division. So it's a really great opportunity for us to engage with these companies. And we spoke a lot about some of the short-term risks that they're encountering and how they're addressing that, but then importantly thinking about the longer term as well, what strategies and investments they're doing today to improve their competitive advantages and then also bolster their brands as well. Like any good consumer staples conference, there were plenty of opportunities for us to try their latest snacks brands, beverage products, skincare products, you name it, it was all there.
That sounds like a great conference. I think I'd like to attend it myself. We've noticed price increases at the shops lately. I think everybody's noticed that. What do you think is going to be the focus for the companies to drive growth going forward? And what are the key themes you heard at the conference?
Yeah, so obviously we've been through a really volatile period for the sector. We've seen double-digit pricing growth and positive volumes. And now that inflation cycle's played out, pricing has reverted to a low single-digit level. And unfortunately, volumes have turned negative. So growth in the sector has been much harder to come by. And companies need to pedal really hard to get volumes to reaccelerate again. So we heard a lot about that at the conference. And there's one thing to know from the consumer staples sector is that volume growth, it's the hallmark of a company that's high quality and executing. And so those companies, they know their consumer well, and they have the data to support that. They have the teams to create those new products to address those needs. And they also can communicate that effectively to the consumer as well. So it's that combination of factors that we're looking for, and it was a key focus of the conference as well. So on that first pillar, the consumer data and analytics, after listening to a lot of presentations across the sector, from high quality to low quality, we noticed that those high quality companies, they have the scale advantage in this. They know their consumer best in those categories. They also have the financial firepower to be ahead of the technology and really leverage that for their advantage. So they're in a winning position in comparison to those smaller or lower quality companies in the sector. On that second piece, in terms of innovation, bringing a buzz and excitement to the category and really engaging that consumer, they're in a much better position to do this than what they have been in the past. They've been able to replenish their pipelines because the supply chain's now in a less volatile position, and that we're going to see a lot more of that coming to market over the next few months as well.
So we'll continue to see the companies spend and invest more in their brands?
Yeah, that's right. So on that third pillar, communicating to the consumer, that marketing piece, there's going to be a differentiation between the companies in terms of their willingness and their ability to actually invest in marketing. If we take an example like L'Oreal, for example, which is in the Global Fund, they've been able to grow revenues really consistently over the last 3 years and reinvest in marketing as well. Actually, their marketing's up 50% over the last, since 2019 levels. So it's quite material. They have the financial firepower to continue to do that and really engage those consumers at the largest events. Sometimes these companies are paying upwards of $10 million for just a 30-second or a minute ad campaign. Sometimes at the Super Bowl, for example, we saw recently they had a campaign with actor Michael Cera and their skincare brand CeraVe as well. It was a really viral example of marketing. So yeah, it was really those three things together that was a big focus at the conference. The consumer data, that innovation, that marketing, that's what we're looking for when we're investing in the space at the moment. I might touch on another theme as well, which came out of the conference, which is less to do with the inflationary cycle, more to do with capital allocation decisions. We've been reading in the news a lot lately. China's, having some issues at the moment, and we were asking management teams, what they're thinking about investing in that market. They're still committed to that market over the long term, but some of those incremental investments are being shifted to other emerging markets. So for example, L'Oreal, they have a material China business. If we put some conservative assumptions around that, if that business only grows at 6% per annum as opposed to double digits what they've been doing in the past, that adds almost an entire Australian business each year. So it's a material market, they're going to stay there. But when we think about what they're doing over the medium term for that incremental investment dollar, India is an example that came out a lot at the conference. That's a market where income levels are favourable and consumption's likely to inflect. So we're going to see companies invest ahead of that. They're going to put down manufacturing facilities, distribution capabilities to be ahead of that trend as well.
And in the global fund, you've actually been reducing your consumer staples exposure through that inflation cycle. Did attending the conference change your outlook at all?
No, I'd say overall, thinking about all those insights and learnings that we had, it really reinforced some of those debates that we're having amongst the team. And we're quite comfortable with the level of exposure that we have in the portfolio at the moment. There are still some short-term risks in the sector. That cost inflation cycle, it's still present in parts of their business. Wage inflation is still positive. That impacts these manufacturers. And then also thinking about agricultural commodities as well. There's pockets of elevated inflation there, which companies will have to price for. Cocoa prices, you may have seen in the news lately, they've soared to all-time highs at the moment. So, the price of chocolate's going to go up, unfortunately. So that's one piece. When we're thinking about volumes, we've already talked about it. That's going to be a key differentiator over the next little while. There's going to be companies that can execute on that winning formula I spoke about. There's going to be some companies that don't. So what we're watching out for is those companies that are in differentiated categories. Some examples of that in the portfolio is pet care, oral care, and also beauty, as we've spoken about. And so we want to position behind those categories as well and really avoid those more commoditized categories. So think of an example like mayonnaise, tomato sauce, or breakfast cereals. They're the categories where we want to avoid exposure, because we might start to see some higher level of discounting that comes into that category to stop the consumer from trading away to a cheaper private label alternative.
You mentioned that Colgate-Palmolive were at the conference, and that's been a more recent addition to the global portfolio. Was there any sort of key learnings from the conference that added to your thesis on this company?
Yeah, so just a quick overview of Colgate as a business. Of course, they're known for their enormous oral care franchise with their Colgate brand. That brand operates 20% of the market. They're twice as large as the next brand. So it's a really large and incumbent business, high quality, high margin. They also have a really nice India business as well, which is leveraged to any future trends there. So that's one piece. Second piece of their business is quite an established home and personal care business, which is led by their Palmolive brand. And then the last piece of their business is a pet care business, which you might not know. They own the Hills pet food brand, which you may have seen at your local pet store or vet as well. So Colgate serves a really important role in the defensive sleeve of the portfolio. These are, they have incumbent brands in daily use categories. So we're not expecting to see consumption decelerate as we move through a cycle. So there's like an earnings resilience there that we really like. And we also like Colgate at this point in time because we think they're executing really well and investing behind those three pillars we talked about, that consumer data, the marketing and innovation. They're really starting to hit their stride. And we've seen that play out in the oral care category in terms of how they're innovating against whitening, the whitening category. They were really early to leverage consumer data and understand that consumer and see that there was a beauty trend that was emerging there. And they quickly leveraged their teams, their R&D to reformulate those products and release new product packaging as well. So they went from a toothpaste business and they now have whitening pens and other at-home kits, which you can do at home. And that's been really engaging the consumer well. They've grown market share, and luckily enough that business is a margin accretive business for them as well, which we really like. So hopefully that brings together some of those insights we learned at the conference and how that's impacting portfolio decisions as well.
That's been great. Thanks so much, Lucina.
Thanks, Luke.
And thanks for joining us today. If you have any further questions, please contact the Magellan distribution team, and please feel free to share this video with your colleagues and clients.